Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate, with host Glenn Sutherland.
Welcome to another episode of Canadian Investing in the U.S. This week, our very special guest is Karen Hayhurst. Karen lives in Guelph, Ontario. Her original career was in business administrative accounting. Her very first job in high school was in a top-producing real estate office in Kincardine, Ontario. After graduating from Conestoga College, she was employed at Cambridge Shopping Centres, a major retail real estate developer. Karen embraced her enjoyment of real estate and investing. In September 2017, she incorporated her business, Inspired Vision Incorporated, which is a real estate investing corporation. Since July 2017, Karen's private lending investments are approaching $5,000 monthly. Karen not only uses her own funds invested in various private lending deals, but she also helps match lenders up with borrowers for amazing returns. And since Karen loves to teach and empowers others, she is starting courses, workshops, webinars, and private lending. So, Karen, for people who don't know, what is private lending exactly?
Okay, so private lending is, we're not the big banks. We're not like the mortgage brokers and the mortgage agent. A lot of us, it'll be people that use their own money to invest in different things, and mine would be real estate. Mm-hmm. Okay, so yeah, that's really private lending in a nutshell.
What kind of people use private lending? When's the situation when that comes up?
Okay, well, now more than ever, it has certainly accelerated. And one of the reasons is because of stress testing of the banks, for mortgages. Yep. So definitely people that cannot get a mortgage, right? Maybe their credit's great and everything else, but they just don't have that 2 years of income, I shouldn't say that, they're not going to or they need a larger down payment. We'll say that they may use a private lender. Some people, especially who do flips, may totally want a private lender because, the money is, without strings and that to be able to get the money, there's not a lengthy process to it, right? If the reno for the flip is done quickly, right, it can be returned back to the lender quickly. So there's not a lot of strings. So people like that as well. Mm-hmm. Some people use a private lender. Let's say they're trying to get a mortgage, for example, but they owe taxes. Okay, so they could turn to a private lender and say, hey, you know what, if you can loan me like $15,000, right? I get my taxes cleared away and I get my mortgage. That's the best use of private lending. I mean, some people may use a private lender to get a car. Yeah. However, we all know that's not going to be back, right?
Yeah,
so bad debt, right?
Because you're not normally looking for like a long-term loan, like a car loan, right? You're looking for a quick return on your money. You want it to be like moving like every month or 3 months. What's your like term you're looking for?
Yeah, I know somebody who just asked for 1 month. Just recently, which to a private lender, that's like music to our ears because, 1 month, maybe it's 10%, over a year, like 10% a year. Yeah. Okay, so things like that, the shorter the term, especially to me, the better because the money's in flow and it actually helps it become more inflation proof. Because if you can imagine, say January, it's 10% might be the going rate, but then a lot of people are using private lenders, interest rates are going up. So maybe by, let's for example, say June, 12% is kind of the going rate. But if somebody goes in a private lend for a whole year or 2 years, and remember, this is hard money. This private lend is hard money. So they've just lost the opportunity of getting the 12%. So short terms for private lenders, at least definitely for me, is what I really like. Less than a year. Yeah.
Yeah, no, it makes sense. And also, I think like if I was doing, I feel like I'd be, getting your money back and then you can loan it, even you can loan it back to the same person. You just feel, you've completed the deal and it came back. You didn't lose your money. No one walked away with it, or you know what I mean?
Yeah, they're not on a beach somewhere on you.
Yeah, exactly. Actually, completed. It's all good. Yeah.
Yeah.
So is there like a geographic area? Like, do you only only loan out your money in like the Kitchener-Waterloo, Cambridge, Guelph area, or do you go wherever? Or?
Well, I've been fortunate enough to get to know some lots of people, and definitely some could be here in Ontario, know property out in Edmonton,
Yep.
or have deals going out in Edmonton.
Okay.
So I've did that, but I've gotten to know them, and of course around Kitchener-Waterloo and Cambridge, I have a significant amount in there, and I think what's really cool, as a private lender, that I'm fortunate, and I would invite anybody, this is a great thing, is the people you've lent to, it's really nice when they invite you out to the property and say, hey, look what your money, is doing, and look, it's just like, wow, that's so cool. So it's nice when you have the local properties you can go visit, and being able to trust those people out in Edmonton, and that things are being taken care of, right?
Yeah. So the people in Edmonton, have you like met them in person? Like how did that relationship start?
Yeah, actually, both. I've met both, because there's two of them. Yeah. That one was at a summit, investors summit, that real estate organization belonged to, and but actually both of them belong to it. And one, she has a bunch of executive condos, and it just so happened that she is back in Mississauga. So despite our Skype calls and that I got to know her there, I got to meet her face to face. Yeah, and have lunch and do this thing. It's always great.
So that sounds like it'd be a longer term thing than if she's doing like condos, right? Like,
well, I'm not invested in her condo part. I'm in another part of
gotcha.
Her business.
Yeah.
And it's a year term, but that is a totally passive. So as that private lender, and since I do this full time, it's really nice to have the really active ones that you're just like, just what you said before. They've done a deal. Okay, put the money, go find another project. And then you have the other ones, like the two out in Edmonton that just like, okay, I don't have to do anything. You just handle the money. Yep. So it's just totally passive.
Yeah, no, that's nice. Yeah. So what for protection, how do you protect yourself on this, that someone doesn't just take the money and go off to the beach?
I don't have people with striped suits. I'm just kidding. So one of the things is, of course, doing your due diligence and doing that beforehand. When I joined the real estate group that I belonged to, I knew I wanted to be surrounded by people that, were vetted, right, and what they were doing. And so as I got to know people, and that was one of the things, how many property, and these kind of conversations, right? Yep. So one of the things I would help protect myself is the reputation. Yep. And I've noticed right now, because I've gotten called myself by somebody who's going to lend, who I'm a reference for the borrower, right? So now people are doing that more. They'll call up a previous lender and say, check the references. So that's another thing, right? Checking references. Word of mouth is very powerful, right? Because if something goes bad, everybody's going to talk. Getting to know them, knowing they have other properties, so that if this one property that maybe I'm invested in, this one project, it goes bad, I know they have other properties, right, that they can get the money out of. And
I remember when I spoke to you in person, you were mentioning you do like a private note on the property, right? And then there's some sort of clause in there so that if you could get money from the other properties if needed.
Yeah, so a promissory note is thing. I mean, some people call consumer loans or hard money contracts, right? I mean, there's maybe slightly different, but they're pretty close to the same. Yep. So there's one clause in there saying that if something should go, they default on the payment, right? Then you have the right to go after for the money. So, people look at promissory notes as, ooh, that's too iffy or whatever, but not really. And if you do your due diligence before, it's actually just something like it's a written piece to support what you already know about them.
Gotcha.
And their habits as an investor. Oh, and that's the other thing I gauge, too, about when you're saying about that they don't take off. Well, this is even more. Slightly different. I actually see if they pay on time, right? Paying on time is really important. So if somebody comes to me and says, hey, you know, I was thinking about investing so-and-so, you know, I would like to say, yeah, they always pay on time. It was really, really good. Never had to chase the money.
Gotcha.
So that's a bit of the credibility side too, right?
Yeah, I wonder if there's like a way to test that beforehand too. Like if you could, I don't know, see their credit card statement, see when they pay, or see something, you know, see what, you know, get some sort of history. Show me some history.
You could do a credit check.
Yeah.
Okay. You could ask them to pull up, which is the better side, to go, you know, a lot of us will have Equifax or have a membership or the subscription to Equifax like I do.
Yeah.
So that you could just say, or I could just pull off mine and say, here's my thing. You know, I've always paid on time, blah, blah, blah. So you could do that.
Yeah.
I mean, that's a good one to do, but you never know. I mean, somebody could be, you know, the best at everything.
Yeah.
Right. So, I mean, it might be supporting, but you actually, you know, sometimes there's that, of course, that little piece of faith, right? Yeah. You know, a big piece sometimes.
Yeah.
Yeah.
And so do you get it all drawn up at a lawyer's office, or did you just like the first time and now you have a good template and you just use the same template, or do you actually go and, you know, register it each time? Or?
Well, since mine are actually all promissory notes.
Yeah.
Okay. You know, the first one I used, yes, was because I was the lender, right?
Yeah.
Luckily, the form, it was by somebody's lawyer. So, I mean, you know, they're pretty similar. So for me, since I've been the lender, I actually haven't had to supply the forms so much. But however, I do have a lawyer that's working on like mine. So I'm going to have a uniform one.
Yeah.
Going out there.
Cool.
So,
and then the cost, if you're doing the lawyer, that all goes to the borrower, correct? Like.
Oh, the borrower should really, and I know some people do things differently, right? Now the borrower really should be paying for all that. I mean, if you get beyond the promissory notes, like some people after 50,000, they may want to register the property. Then you get into a whole other thing. There are people who do promissory notes for more than 50,000. I've one of them, and that's my choice. I know the person well, so I don't have a problem just doing a promissory note.
Have you ever thought about becoming like an equity partner, or do you just like to be the money partner, the debt partner?
That's the good debt partner. Yeah. So here's, and I think too, we had talked a little bit about this side when we were at that meeting. Yeah. Is I always do my net worth. My original background's accounting. Right. Yep. So one of the things that about value is having a net worth, and that tells me my position in things. And so I do it once a month. So one of the things it tells me too is when's it time to take an equity position, right? You know, yep. So for me, I'm at that point where I could say to one of my borrowers, right, you know, I really like this property. They could say, hey, I'm thinking about JVing it or whatever. I'm going to switch it over to a JV situation. I could say, okay, you know what, I'm really interested in this. I'll maybe keep, let's say if the numbers work, 10% in it. I just want 10%, and you pay me back the rest of my 90%. We go find another project. Yeah. So you can imagine if I had 10%, or somebody could get 10% equity without, you know, having a lot of money locked away and is able to do more projects like that. That number of properties with 10%, you know, maybe 10 times, but they haven't actually spent, you know, all their hard cash isn't stuck in one spot. So they're getting the best of two worlds, right? They've got an equity position in a property they've gotten to know, and it's doing well, and, you know, to know, trust, and like it, and with the investor that they're with. Yeah. And then they can go on another project with that. So they've also bought a relationship with that borrower, like that investor.
Is there anything else I should ask? Is there anything I missed here?
In private lending, it's kind of twofold thing. We're sometimes seeing people are a little afraid of us because they think, oh wow, you know, like 10%. They think 12 and all that's going to cost me a lot of money. Yeah. Okay, but if you think a little bit the other way, if you've got a great property right? That's the numbers in that work. You could only use that private lender for a few months until you get other things in place. So it's actually very flexible. I don't charge somebody if they pay me back early. Like say if they say 6 months, but hey, they got the reno done in 3 or 4 months or whatever. I don't get, that's fine. Just pay me back my money. I'm not going to charge you a penalty for paying me back early. That's even great because now I have the money because somebody's offering me 14%. Right?
Yeah, no.
or hey, you got another project. I like what you do. So there's that. So the cost of that money over a couple of months actually isn't that bad from what it sounds, because people are thinking a whole year. But if you're going to use a private lender just to get a deal done, just, for those few months, it's not that expensive.
Oh,
right?
Especially if you're just trying to do like a construction loan, because they're almost impossible to get from the bank. And then you can get your renovation done and then refinance and pay everybody back. It's great. I think with us, we like also to have somebody who has more than one exit strategy. So if you were coming to me and saying, hey, I'd like to borrow $100,000. Okay, one of the things is I'd like to know is, and hopefully you offer it to me, hey, this is my term, this is my exit strategy. And if this, this is our plan B. Okay, that's great, because you're telling me that you've thought of a lot of scenarios. You're not stuck on one idea. If the market says, hey, that flip isn't going to work right now, and you say, hey, well, what we're going to do is tenant it out. And here's the other thing you can do with private lender is what you could do is they're in that deal, lending the money, and you think, okay, I really like working with them, and they seem to really like this property. How about I could ask them if we could just switch around the paperwork and I can make them a JV. And one of the great things is, now you don't have to pay them back necessarily their money in. Like they could be in a tax position. They actually want it sitting in an equity position too, right? So they think, okay, I can leave that amount of hard cash in there for, you never know, right? Yeah. I had to flip and it didn't go the way I wanted, and it turned into a rental.
But now is it good? You're happy you did? Or you're waiting for that day?
Well, I am, because of the market in Cambridge, and it really took off. So, but if it didn't do that, I would have preferred to get my money out and move it again. Yeah.
I mean, it is a good thing. Cambridge is good, right?
Yeah.
I have some money invested in a couple in Cambridge, actually. So that's all good, right?
Yeah.
It's all good.
These are all interest only. You're not doing a pay down of the loan as it goes, correct?
No, interest only.
Makes it simple too.
Yeah, it is really simple, easy to calculate. Here's another thing is for people doing borrowing, it is possible for you to have more than one private lender on a property. Some people get caught up in, hey, find that private lender that has 100,000. Okay, and there are some people.
Yeah.
Okay, but and you're offering 10%. Let's just say you're offering 10%. Mm-hmm. So. But what does it matter if you got 50 from two people? 10% of 100,000, like two 50s together, is still the same amount. And you could have somebody come up to you and say, hey, I could do 50.
Yeah. Okay,
take it, right? And go and find the other 50. I had this friend swear at me, right, in a good way. She was like, you got to be kidding. Are you sure you worked that number right? Because she was going to get $300 a month in interest.
Yep.
Okay, and we worked it out, actually, which it was $330. But the deal is actually the bank ended up paying for our car payment because we used a line.
Oh, yeah, just.
That was, I think you'd heard that story. Here's the other thing: when you use more than one private lender, you just increased your Rolodex of private lenders. So, hey, you have, say, maybe a guy named John or something, and he's private lending a property. John has something happen. He needs, say, his 50K back. Okay, so many private lenders now. It isn't hard for you to say, hey, Paul or Jane or whatever, can you fill in, can you take over John's spot? Or you can tier them. Like you think, okay, I'm going to get this person to do my down payment. you know, and another one's going to do the renos, right? Got plan in place.
Sub them out, yeah.
Yeah. And then just stagger their term ending.
Yep.
So that you're not stuck paying a whole bunch all at once.
Yeah. No, it makes sense. So Karen, if anyone wanted to contact you, what would be the best way to do so?
Okay, they can email me at ReikiKarens, REIKI, then KAREN @rogers.com, or they could text or call my cell phone at 519-404-1498.
Well, thank you for coming on the podcast, Karen. I appreciated your time and all your knowledge. Maybe we'll have you back in the future.
Awesome. Thank you so much, Glenn, for having me. It's been a pleasure. I really appreciate it.